Hi everyone and welcome to another video of Kiwi Investments. I want to keep this video short, but I do want to weigh in on what's going on in the US stock market right now. And I also want to talk about the job report that was released on Friday that has caused a lot of confusion in all of the so-called financial experts. For more than 3 weeks now, I've been telling people to consider investing in the US stock market. Some of you have listened and used my referral link in the description to get yourself a free stock. Congratulations for those people for not only getting a free stock, but for also investing in the US stock market, because it's most likely that your portfolio is now up. Now what I want to focus on this video is this light blue column here. This is the price change since the 29th of May. So this light blue column represents how much has the price changed in a week. And as you can see, from just 1 week, these prices have changed a lot. Hertz Global, the rental company, has increased amazingly 157%. Then going down, you have American Airlines 77%, oil and gas company 60%, a retail REIT 53%, and another American airline, United Airlines, increased by 51%. So if you would have invested in these companies on the 1st of June, because this represents the closing price on Friday, the 29th of May. So if you would have invested on the 1st of June and just held it for the week, this is how much your shares would have increased from just 1 week. Now on a separate spreadsheet, I have the New Zealand companies. And if you would look at how much the prices have changed in this previous week, the top one being Tourism Holding has only increased 33%. And if you come back to the US spreadsheet, you have so many other companies that are well over 30%. So I am encouraging Kiwis to start thinking about investing in the American stock market for your own benefits. And if you haven't done so already, use the first link in the description to sign up with the platform Stake and start investing in the US stock market. If you use that link, you will get a free stock for signing up and funding your account. Remember, you need to fund your account. And speaking of that, they use Poly to transfer funds. Now I do get people worried about Poly because you need to provide your banking logins, and that seems to scare a lot of people, which is very understandable. But Poly is fast and completely safe. I have used it a couple of times now, and it is used by all these companies as well. So you don't have to worry too much about it. If you're still worried about your bank login details, then what you can do is you can change your password straight after you have funded your account, or you can change it before and then change it back again. Once you have funded your Stake account, then you will get a free stock and you can start buying and selling US companies without any brokerage fees. I have done a review of the platform Stake. A link to that video will pop up on your screen at the end of this video. But right now I want to start talking about the May job report that was released on Friday. All the so-called financial experts are confused as to why there were 2.5 million jobs added.
Joining us now to discuss the employment report is Mohammed El Arian. He is Allianz Chief Economic Advisor. And Mohammed, so you wrote this morning, or you tweeted, quote, "In sum, a head scratcher that needs analysis." Why are you scratching your head on this jobs report?
I'm still scratching my head. I don't think I'm the only one.
So what I'm going to do is I'm going to change this column from A to Z, and I'm going to start going down slowly, and you can pause the video on a company that you like when it comes up to see how much it has changed and what the current share price is. While doing that, I will give my personal input on why 2.5 million jobs have been added, because to me, that's no surprise. So for those of you who have been following my channel, you would already know that I went to aviation school and I also have a bachelor in psychology. But what most of you don't know is that I also have a graduate diploma in human resource management, and I worked in human resource as well. And that is why this 2.5 million jobs added is no surprise to me. One of the hardest things in HR is to get the right people into your business. It's one of the biggest struggles that we experienced just before the pandemic. And right now, with a lot of people unemployed, there is a lot of talent looking for work. And this would be the perfect opportunity, because before right now, unemployment was really low. It would cost a lot of time and money to get the right person for the right role. Most of the time, we would just have to hire whoever applied because time was against us and we needed a position filled. And to get the right person, most of the time we would have to headhunt. And headhunting is expensive. First of all, you need to spend time looking for that right person. And also you would have to offer something very attractive for that person to leave the current job they are in. So if I was still working in HR, I would definitely look to recruit people right now. because there's more talent to pick from. So that explains why there's 2.5 million jobs added, because if you would have waited until the economy picked up again, most of the top talent would already be recruited. So you had to beat the other companies and hire the best talent straight away. I hope that makes sense to you. The reason why most of these economists are scratching their head and failing to understand is because they don't understand how much value the right person can bring to the company. The human resource department and the financial department usually bump head because the financial department doesn't see how much money people can generate to the company. Usually the finance department sees employees as a big cost walking around, because in their books, people always come up as an expense, and the value that they bring can't be put on a book. And that is why I believe why these financial experts are confused as to why companies are hiring right now. So what do I think is going to happen from here on out? Well, I think the market is going to continue to be very volatile. The price changes are going to go up and down a lot, but overall trend will be up. At this point, I do want to remind everyone that I'm not a financial expert. I'm just giving my personal opinion intended for entertainment purposes. There's a lot of noise on the internet about the latest job report, and no one is talking about the talent. Companies are hiring because they want that right talent, which is very hard to come by. So these companies are making the most of the situation. Well done for those companies. Those companies understand that this lockdown won't continue for long. The borders will reopen again and it will be business as usual. So it makes sense to get the right people on board and get ready for the opening. You can also save money on training by hiring more than one person. So you can train a group rather than training individually, which will save a lot of money as well. As long as there's no new bad news, such as an increase in the US and China trade tensions, or a new disease starting up, or even when the borders reopen, there could be a lot of plane crashes. Now I'm saying that because planes usually experience difficulties when it hasn't been used for a while. So this could lead to an increase in plane crashes, which will put off a lot of people from flying if the pandemic hasn't already put people off from traveling. But I don't want to discourage everyone or scare anyone, because these troubles usually get picked up on the pre-flight checks. Speaking from experience here. I also think that the New Zealand stock market will continue to increase as well. So if you want to trade New Zealand stocks, then use the second link in the description to sign up with Sharesies. If you use that link, you will get free $5. Now I think the New Zealand stock market will increase as well, because if you look at the top gainers this week, there are some similarities. The top gainers are in the travel industry. But my point is, if you look at airline, so if you look at Air New Zealand, it has gone up 19% this week. And if you come back to the US spreadsheet and have a look at the airlines, so you have American Airline over here, which is up by 77%. Then you have another airline, United Airlines Holding, which is up by 51%. You also have Boeing, which is up by 40%. So if you would have picked any of those, it would have been better than Air New Zealand. But don't get me wrong, 19% is still a lot. But my point is, in the US market, there's much more options and the price changes are much bigger. I also want to point out that there are reasons not to invest your money right now. And that is just normal for the stock market, because for every buyer, there has to be a seller. And what I encourage you to do is think of both sides of the story. So for reasons to not invest right now is that the market may be getting ahead of themselves. We still don't know when the borders will open, and we don't know when a vaccine will be available. We also don't know if people would start traveling again. Maybe people might require some time to feel safe to travel to another country again. Because when I was living in Canada, I met a lot of Canadians who refused to fly after 9/11. Now, they didn't lose any family or friends from that unfortunate event, but they still refused to fly for that reason. Now, because of this pandemic, there may be more people refusing to fly. So that's something to consider as well. Another point is that since there has been an increase in jobs, the government might stop providing support to the businesses. So that's another thing to consider. There are also a lot of other things to consider. These are just some of it. So I really encourage you to consider both sides before investing, and invest what you're comfortable with. That's it for this video. I want to keep it short. I just wanted to give my personal opinion, which is very different to what's out there on the internet. And of course, I could be very wrong.